Welcome to RANsquawk's e-morning briefing for Thursday, 11th of March 2010. In terms of the Asian session, there was quite a few economic data points of note, particularly coming out of China, where we did see quite a rise in terms of the inflation figures. Both CPI and PPI did come out quite a bit higher than consensus. Did spark some fears about possible tightening to come in the near term from the PBOC. However, their Deputy Governor, Su Ning, was quick to come on the wires, attributing some of that jump in the CPI numbers to the Lunar New Year holidays we've just had in the last few weeks in China and Hong Kong. In terms of other figures, retail sales in China were also stronger, although industrial production was slightly weaker than expected. The Shanghai Composite overall, though, did manage to eke out some gains towards the close. Elsewhere, in terms of Japan, they had their latest in terms of their final Q4 print for GDP, which on the year-on-year basis came in at 3.8%, slightly weaker than the anticipated 4%. The Nikkei, though, did manage to finish in positive territory, up around 1% or so. In terms of what we've seen so far in Europe, things have been relatively subdued in terms of the equity market, pretty much a reflection of what we saw yesterday. Volumes overall pretty much on the more modest to light side. We're currently around mixed to slight negative in terms of the FTSE, CAC and DAX. In terms of Bund futures, slightly lower, we're down around 7 to 8 ticks last, but again the volumes there, not too much, just over 100,000 contracts changing hands thus far. In terms of some of the other notable moves, we've seen a bit of a bid in sterling across the board, cable up around 50 pips or so, so looking to retrace some of the losses that it has seen in this week. In terms of some of the reasoning there, we have seen the latest in the Bank of England quarterly attitude inflation survey, which did show that has now risen to 2.5%, the highest it's been since back in mid-2008. It's an increase on their previous forecast in terms of consumer expectations of inflation in 12 months. And taking a look ahead in terms of the calendar for today, we'll now look forward to the US session, where we'll have the weekly jobless numbers. We'll also have US trade balance today, and then for US fixed income, we'll look to conclude the Treasury auctions with the 30-year notes. That'll be at 6 o'clock London, so that'll be midday in Chicago.